Welcome to Moneycontrol Live. I'm Manisha Gupta, and the full focus right now is on gold prices, where we have seen some profit taking after those initial gains that we saw, up by almost 5% in the previous week. So all those people, many of them actually, who went long did go in for some profit taking, and that's exactly what we have seen in the markets yesterday and today as well. But when you look at the broader picture in the last 1 year, that is, the gold prices and silver actually have given you better returns than what Sensex really has done. So let's find out on what the near term and slightly longer term view is in case of gold prices. Joining us for that is Mr. Amit Goel. He's Chief Global Strategist at Pace 360. Amit, hi, thank you so much for joining us. I'll first of all talk about the near term views in case of gold prices. $100 of a move on the higher side and then some profit taking. How have you read that on charts?
Thank you so much for having me on, Manisha. So I think the sense that we are getting is that gold has bottomed out at $1,810, the price that we saw about 7-8 days back. And I think this is going to be a very big rally in gold. And this is not just a few days or a 1 week rally. Of course, this rally in part was triggered by the risk of trade coming from the developments in the Middle East. But the sense that we are getting is that while we may consolidate in this range for some time, because 1910 to 1940 has been a congestion zone for gold for the last few months. So it's quite likely that we may spend some time in this range, broadly speaking, let's say $1,900 to $1,950. But once we go out of this range, I think it's going to be on the higher side. And once we break out of 1950, we believe that within the next 6 months, we should be targeting a price of about 2,200 per ounce.
All right. You know, Amit, various reports are suggesting that gold in the next year could be anywhere between 21 to 2,400 on the higher side, and you're bang right there in the middle of that expectation. Amit, also talk to us about on how gold has been vis-a-vis other asset classes, because when I look at the charts, October to October last year and this year, we've seen gold prices gain up by 17%, silver is up 23%, while Sensex has gained something like 11%. How do you see this overperformance that gold has shown vis-a-vis other major asset classes?
See, while I agree with you on what has happened in the last 1 year, and it's correct that gold and silver have outperformed Nifty and Sensex. But if you look at what has happened in the last 12 years, for example, exactly 12 years and 1 month back, gold was at $1,911. And in those times, Nifty was, let's say, around 5,000 odd levels. Now, Nifty from 5,000 odd levels is close to 20,000 levels, which means it has gone up by about 4 times or thereabouts, while gold is exactly where it was 12 year and 1 month back. It was $1,911 in September of 2011. And here we are in October of 2023. And we are still at about $1,920. So this has been one of the most spectacular underperformance in gold that we have seen in decades and decades. So my sense is that we are in the process of getting out of this 3-year consolidation that we have been. So we went up to $2,070 in August of 2020. And we have been basically in a 20% range for the last 3 years now. My understanding is that we are going to take out this range and we are going to make a new all-time high on gold within the next 6 months. And same time next year, I would not be surprised if gold is, let's say, about $2,300 or even $2,400 an ounce. So we are breaking out of a range here. We may consolidate here for a few days or maybe even a couple of weeks, because the rise last week was pretty stunning. We went up $120 in a matter of 6 or 7 trading sessions. But I think this has a long way to go. And the underperformance of gold vis-a-vis S&P 500, vis-a-vis NASDAQ and vis-a-vis Nifty over the last 10 to 12 years, I think that is going to wither away now. And over the next 2 to 3 years, it is very, very highly likely that gold is going to outperform Nifty, it's going to outperform S&P, it's going to outperform NASDAQ, and it's probably going to outperform most of the asset classes in the world.
Amit, also talk to us about on what would really support this or encourage this. I mean, how would you look at the bond markets, then the interest rate scenario, or even the dollar index for that matter?
Yes, so see, we are macro top-down players, and for us, the bond yields, the inflation, the GDP, and everything, these sort of go into our models, which then suggest to us what could possibly happen on different asset classes over a period of time. And the sense that we are getting is that US is headed for a slowdown very, very soon, and in fact, US is probably headed for a recession in 2024. So, considering the outlook that US economy is going to slow down meaningfully, we believe that the bond yields are close to the top. So the Fed fund rates are very close to the top, and the probability of another rate hike over the next 4 months is now less than 50%. So Fed fund rates are already, they have come up a long distance, 525 basis points in 1.5 years. My sense is that we are close to the top on the Fed funds rate. We are close to the top on the bond yields because the economy is going to slow down. If you look at the inflation numbers in US and Europe and even UK, and New Zealand, for example, came up with their inflation numbers today. So the inflation numbers are also probably peaking out. And once we get into a slowdown all over the world, China in any case is looking extremely weak. The Chinese economy over the next 2 to 3 years, our prognosis is that it's going to be extremely bad from here. So putting all these indicators together, it makes sense that the bond yields come down. Fed probably starts cutting the rates sometime in the middle of 2024. Inflation numbers start looking a lot more benign. They are already much more benign compared to a year back, but they will probably look even more benign over the next few months. And the dollar index, which made a peak of 115 last year, it has just made a peak of about 107 a few days back. Our sense is that dollar index is now headed down, bond yields are headed down, inflation is headed down, and the broader global economic outlook is also looking bleak for 2024. So putting all these factors together, I think this is probably the most conducive backdrop for a massive rally in gold, and having underperformed practically all major asset classes over the last 12 years and having consolidated so long over the last 3 years and 2 months in the post-COVID scenario, I think now the time has come when gold breaks out, and once it breaks out, it's going to outperform all asset classes. And the entire macro backdrop is now extremely conducive for gold, and it's probably looking negative for equities, and it's probably looking negative for the risk assets over the next 1 year.
All right. Amit, thank you so much for joining us. Well, that's a very bullish cues and bullish backup. Lookout coming in for when it comes to the gold prices. So 2024 perhaps is the year to watch out in case of gold. 2100 to 2400, as Amit also says, could be the prices that you could be looking at in case of gold prices.